Hey everybody, Dana Monson here today with Keller Williams Realty, and I am with my friend Kirstin Ward. She is a mortgage broker with Movement Mortgage. A question's come up a lot with people that we speak with that are homeowners that are currently in a really low interest rate. They want to move, they want to downsize, or they want to change locations, but they're just feeling trapped. They've got a lot of equity in their home, but they're worried about buying the next house. They're worried about high interest rates and what that payment's going to look like. So I asked Kirstin to join me to talk about maybe some solutions that she can offer. So Kirstin, what happens in a situation like this?
Yeah,
I have a home. I want to sell. I want to buy, but I'm just not really sure.
Yeah. I think the first thing to do is really look at your goals. What are some of your long-term goals you have, not only for buying and selling real estate, but honestly, long-term goals of your financial plan? There's a couple different ways to approach the question. Do I want to continue to build my real estate portfolio or real estate wealth? Or am I looking at just making the lowest possible housing payment possible? Because I think depending on what your focus is or what your strategy is, that really will determine the next steps you take.
That makes sense. Okay. So you said increase my real estate portfolio. So what that would mean is keep the current home that you're in, the payment's low, and putting a renter in there and buying a second home and being a landlord.
Yeah. There's a lot of people that are becoming instant landlords and didn't anticipate that, but you've got an incredibly low interest rate, incredibly low payment. Rent in your area may be more than what you're currently paying. So your property could potentially cash flow right away. Thus, you'd have equity in your new home, equity in your departing home, and begin to build that real estate portfolio.
Okay. So in order to qualify for that, can I use the rent that I would be receiving from the home that I currently own that I'm renting out to qualify for the next home?
Yep. Actually, one way to do that is to take the rental amount that you would be receiving from the new tenant. We do discount it a little bit for a vacancy factor. It's called a vacancy factor in lending. But then what we can do is we can take that and apply the amount towards what your mortgage payment was the mortgage payment for that house when it goes to your debt to income ratio.
Okay.
But talking to a mortgage professional really does help you look at those real numbers.
Absolutely. Okay. I don't want to be a landlord, but I also know that the market is moving quickly and competitive, and it's not necessarily, I'm not going to be able to negotiate the best way if I have to sell a home in order to buy a home.
Right.
If I can qualify to buy that next home, but I'm worried about 2 mortgage payments, what are some other solutions that we can talk about?
Yeah, if you can qualify with both payments and you have the down payment to make the purchase, we can definitely do that. It is a non-contingent offer. It would be as if you didn't have your departing residence, so that real estate, and make you just the same as any other buyer. There is a strategy for once you do sell that departing residence and that amount of equity or that cash you gain from that sale, to apply it to the new mortgage is something called a recast, and where you can reduce your new mortgage payment on the new loan through that process. So it would be taking the new principal balance and the same mortgage terms and then getting a lower payment. It's different than a refinance. Again, talk to a mortgage professional on the details.
Right. So I don't want to put all that expense into refinancing the home, but I can get a lower payment because I can put a big chunk of money on it.
Yeah, and it comes down to the loan program. It's something that you would want to clarify if that is the true goal, you would want to clarify that with the mortgage professional so that they know to make sure that the product they put you in has that option available to you.
Okay. Sometimes people ask me about bridge loans. Can you tell us what a bridge loan is?
Sure. A bridge loan is taking the equity of your departing residence and applying it towards the new purchase. So there's essentially 2 loans that are going side by side. But what it is if you didn't have the cash on hand, it can tap into that equity to help you bridge the gap.
So I guess what we're hearing is that there are a lot of different options, and this is Definitely. A lot of information. So if this sounds intriguing to you at all, you've got questions, please reach out to me, reach out to Kirstin, and we will see what we can do to help you not be locked in the current home that you're in.
To make a move!
Yeah.